Hey everybody, welcome back to the channel. We are back with another episode of Daily Palantir. On today's episode, we have three things that I want to discuss. Number one, I want to talk about Bank of America that upgraded Palantir from $18, which was their price target for about 6-7 months, to now $21 after their earnings. We have the full Bank of America report. I want to highlight a couple parts of that report that I thought were really interesting and why Mariana Perez, one of the main analysts that's on the Palantir earnings calls, basically said, look, their quarter was good, call went well, 18, we're bumping it up to 21. I want to discuss the logic for why that's happening. Number two, I want to talk about Palantir's free cash flow in relationship to share dilution. I'm still digesting everything that's happened through earnings, going through the 10K. We talked yesterday about some amended contracts they had in their 10K. And so really for the next couple episodes, I want to take little parts of earnings and bring them to you guys in terms of insights that I'm finding that I think are interesting. And then finally, I was not making episodes. I was in Vegas when the BBC interview came out. There's a good 2-minute segment out of that BBC interview about Palantir's go-to-market strategy that I think is very conducive with what they're doing with AIP. And I want to discuss that and why, as shareholders, it's really important to understand why that go-to-market probably gives Palantir one of the most differentiated moats in the marketplace of companies selling software. Let's get into it. All right, so let's get started with this Bank of America report, and I want to discuss a bunch of different things that Mariana said. So they raised the price target to $21. Now, before we get into the substance of it, when they say they're raising the price target, they say we are raising our PO to 21 from 18 to reflect stronger estimates and roll forward our valuation by 1 year. Palantir is now at $18, so a year from now, so November 2024, Bank of America is saying the price should be 21. So they're saying, like, if it reaches 21 right now, it is a year ahead of valuation because they're factoring all the growth and all the multiples Palantir would be able to get within another year of growth just now, right? And that's what a lot of these analysts do when they issue out these 1-year price targets. So if it reaches $21, basically Bank of America is assuming that another year of growth, probably another $2.45 billion has happened since then. Okay, so let's read a little bit from the report. More than a fad, AI leading to real profitable growth. We see Palantir's beat and raise as a testament to the company's deeply entrenched differentiation in AI services. We expect the momentum to continue as AI platform is still in its infancy and it's already contributing meaningfully. Commercial customer count grew 37% year over year, mainly influenced by US commercial, and revenue was up 23% from US commercial. We expect AIP to continue to accelerate the capture of new customers, particularly in the US, where we expect the commercial business to achieve a $1 billion run rate by 2025. Alex Karp also echoed that on the earnings call. In our view, the strong results and uninhibited statement of AIP's early success are a sign that, at least for Palantir, AI is not just a buzzword of fluff valuation, but a real profitable growth driver. If you take out the SPACs as well in US commercial, they're growing 52% year over year, and that's off of a very high base. So obviously Bank of America seems to be impressed by the growth of AIP. 2024 and beyond, major catalysts ahead. The question we're asked the most from investors is, how can the momentum continue? We see significant catalysts in 2024 and beyond, which should accelerate Palantir's growth. From a macro perspective, labor remains extremely challenging across industries. We see Palantir is well positioned to address these constraints by helping customers leverage their own data to increase individual employee output and reduce costs, which is one of the main bull cases for AI in the enterprise. Can you get the enterprise itself to become more productive? We expect Palantir US government revenues to accelerate significantly in the next 12 months as they reflect with some delays the strength we saw already across the defense services, and the company unlocks more contractual avenues to benefit from the increased spending. They then talk about the 29% adjusted operating margins in 3Q, and they expect 4Q to be 30%. This is the highest they have been in a year. Back in 3Q 2022, these margins were 17%. And that's what caused a lot of people to sell the stock at $8-9 because they just felt 17% margins for a high growth tech company. You're not going to get a lot of value for that. And that was a tough quarter. But, things have changed. They talk about AIP use cases. So from a macro perspective, labor remains extremely challenging across industries while companies continue to face margin pressure from inflation pass-through, lower output, and supply chain issues. We see Palantir as well positioned to address these constraints by increasing individual employee output. Palantir itself has become a self-fulfilling prophecy by optimizing its own business with AIP. Management in the call noted that they've significantly reduced the use of forward deployed engineers. These are engineers that basically turned Palantir into what people thought was a consulting firm because you're paying these engineers all this money to consult with the client. Palantir has not been using them that much because now they've just been using AIP to answer the majority of customer queries. So if you're working with BP and BP has a specific problem, instead of like having a forward deployed engineer go out to Dallas and like answer those questions, you could just ask AIP, right? Because it's basically like asking a forward deployed engineer. Palantir reported a total headcount of 3,810, up 62% since 2019, and LTM revenue per employee is up $500 to $558,000, which is up 87% since 2019. So obviously the growth they're having in the company is corresponding with the value per employee that Palantir is adding. They then talked about defense and government, which was really important. Despite a strong demand and budget for defense modernization, Palantir U.S. government sales have only grown by 15%. This compares to BAH, Booz Allen Hamilton, up 12% year over year organically. However, it's important to highlight that Palantir's organic growth is delimited by the need of incremental contract vehicles versus other defense services that can benefit from incremental spending within existing contracts. Basically, their existing contracts are already bringing them more revenue than having new contracts. We expect Palantir U.S. government revenues to accelerate significantly in the next 12 months as they reflect with some delays the strength we saw already from defense services. Palantir continues to be involved in key early stage projects that should meaningfully accelerate in the near term, like JADC2 and also the Titan contract, which is a $1.5 billion contract Palantir is in the running to be able to get. They then talk about Biden's AI executive order. On yesterday's episode, I did a whole segment on what this order is, why this order is important. But essentially, this order is making sure that when the U.S. government procures from vendors for AI software, whether it's the IRS or the DoD, that they require that developers of the most powerful AI systems share their safety test results and other critical information with the U.S. government. And they develop standards, tools, and tests that help ensure AI systems are safe, secure, and trustworthy. Now, Bank of America sees Palantir's FedStart program, which as I talked about yesterday, as already solving for these new requirements. FedStart allows commercial companies to run their products through Palantir's secure and accredited environment, giving these companies the opportunities to better partner with federal agencies. So if you're a startup or you're a company that wants to sell to the government, you have to have accreditation, especially if you're selling them any AI services that is going to have very confidential control over certain types of data. And according to Palantir, FedStart supports companies to be FedRAMP, which is Federal Risk and Authorization Management Program, and IL5 compliant very quickly within weeks at a fraction of the cost of traditional paths. Palantir just gets to accept some money from those clients, really, gets to sit back and not do anything by giving them the accreditation platform, and those clients can now sell into the government. If the government's going to be spending a lot more on AI, Palantir's either going to get those contracts or they're going to take a piece of other companies that get those contracts. And that, to me, is a really bullish case for Palantir going in the future in regards to what AI is going to be for government revenues. Finally, they talk about S&P 500 inclusion. As we noted earlier, after achieving their fourth consecutive quarter of GAAP profitability, Palantir is now eligible for the S&P 500. In April of 2023, the S&P Dow Jones indices announced that companies with multi-class share structures like Palantir, which have those F-class shares, are eligible. The index removed the multi-share restriction that was limiting the eligibility of a meaningful number of tech corporations, and that S&P 500 as inclusion will probably be good for Palantir when it comes to them having more shareholders buying the stock, whether they're institutional or retail, because they want to participate in Palantir's new inclusion of one of the largest indices of the world. So overall, Bank of America is bullish. Over the next couple of episodes, I'll go over some reports. Like Morgan Stanley had a little bit more of a bearish report yesterday, so we'll talk about different reports throughout the next couple of days of companies that are bearish or bullish. But almost every price target from what I saw, HSBC raised them to 21, a couple other companies raised them to 15, even some of the most bearish companies raised them from like $8 to $11. Our boy Rishi at RBC kept them at $5, so you can do with that what you want to do, Rishi. But a lot of companies raised their price targets because they saw the growth of AIP, and particularly if you're confused why they're raising the price target, they're not just doing it for fun. U.S. commercial, 37% year over year. That's insane. Now, U.S. commercial is not, growing at multiple billions per year yet, but the analysis and the hope is, well, the United States is the biggest market in the world. The commercial sector is the most adaptive market in the world. They really care about AI-enabled software. Can Palantir take that market? Or can Palantir be one of 5, 10 players in the United States that takes that market? And if they do, then it's going to continue to get price target upgrades, and they're going to continue to grow. And people like Bank of America, Mariana, that's been an avid supporter of the company and analyst of the company, is going to publish reports that says, yeah, the price should be higher because the growth is higher. Okay, next thing I want to talk about is a post I found on Twitter that I thought was really important. This comes from an account called @PalantirInvest. And this was some really interesting analysis I saw. They said, by analyzing Palantir's Q3, I realized that for the first time ever, the company generated a free cash flow post-CapEx higher than the non-cash amount of share-based compensation over a period of 12 months. In plain words, what that means is Palantir's operations are now creating more cash value for its shareholders than it dilutes them with share-based compensation. And you can see on this picture below, this is really interesting. So share-based compensation, stock-based compensation, and dilution has been a concern for shareholders for a while. The bull case from a qualitative perspective for any shareholder has been, look, well, we're compensating the most important employees in the world. Palantir is not buying companies. Palantir is developing products in-house. The revenue per average employee is going up. So obviously these employees are very smart, 10x engineers. So we'll deal with it if they can get us the growth. And for the first quarter ever, what you see in green is how much Palantir made in free cash flow, TTM, $475 million. And then how much they issued in share-based compensation, TTM, last 12 months, which is 473. Right, so it's $473 million. So it's small, right? But if you look at every other quarter, the amount we brought in free cash flow was far below. If you just look at Q4 2021, we brought in $321 million. We issued $778 million in stock-based comp. So stock-based comp is not good for shareholders, right? It's good for motivating employees and ultimately getting the company to perform. But for shareholders, it's dilution, right? It's like we are owning less of the company because the company is issuing more stock to employees that probably deserve that stock. But at the end of the day, for shareholders, it kind of sucks because you're seeing your overall ownership start to come down more and more as the pie of shares gets bigger and bigger because the company is issuing stock. This quarter, I would love to see this continue going into future quarters. Even last quarter, look at that. We brought in $375 million of cash flow, but we issued about $500 million in stock-based comp. Now we issued less stock-based comp than we issued cash flows. Why this is also important is because stock-based comp last quarter was flat. It was like $115 million. Management told us last quarter in Q2 that expect Q3 and Q4 stock-based comp to be higher because towards the latter half of the year, we're going to issue more stock. And so we were prepared for that. But Q3 came in flat. I mean, it was $140 million in Q2, $114 in Q3. It was basically $114, $112 in Q2 in terms of millions. So next quarter, they did say it would be higher. Maybe it's like 120, 130. But if that's the case, the TTM on stock-based comp is going to be significantly lower. I mean, it's going to be maybe 450, 500 million for the year, which, back in 2020 was 70% of sales of revenue was stock-based compensation. That has changed to about 22%, which is in line with all other software companies. Even if it's a little high, that's the same with Snowflake, Databricks. That's the same amount in the same range that they're issuing as well. So the idea that our actual cash flows are surpassing on a last 12 months basis the amount of stock-based compensation we're putting out there leads me to believe that in the future, Palantir is not going to have to dilute shareholders by issuing stock. They're going to be able to use their cash flows to be able to pay for a lot of these things, which is also another reason why the adjusted operating income margins that Bank of America was talking about went from, I think, 24% to 29% this quarter and expecting 30% next quarter. If you have more cash, you can finance more things. You can put more cash in treasuries. You can pay for more stock. Your adjusted income, operating goes up. Like if you have more cash, cash flow is the king. And Palantir has more cash, which is why we're seeing a lot less potential dilution in the future if this trend can keep up, because we're just going to have the cash to be able to pay for the things we need to. And again, we are paying for employees that really matter, right? So you can see here the average revenue per employee is $558,000. Back in Q3 2019, it was $299,000. We increased employee count by 62%. And we increased the average revenue per employee by 87%. So every employee we brought on has provided 87% more value in terms of revenue to the overall business. So these employees are compensated pretty well. But remember, if they're compensated in stock, that means the stock has to go up for their compensation to even matter. So there is an incentive alignment with shareholders. And on top of that, they're some of the smartest people in the world, which is why Palantir, instead of paying that money to like some random tech company to acquire them and their team and their talent, we're just building it internally, which is how I think you build a generational company. You don't just acquire other companies. When you're a really big multi-trillion-dollar company, Google, Amazon, Microsoft, then you do that. But when you're a $30, $40 billion company, you got to build it yourself and show to the world we as a company can survive here because we have the best talent in the world. And it seems like the best talent in the world continually goes to work at Palantir. Okay, last thing I want to talk about today is the BBC interview. So I didn't get a chance to talk about this during the time when it came out because I was in Vegas. This is a segment of it that I wanted to talk about. This was posted by Adam on Twitter, and this is a part of the interview I thought was really important and actually mattered in the context of Palantir's go-to-market strategy. This is Karp making his case to the British media for why they should get the NHS contract and what he's talking about in terms of how Palantir tries to compete for contracts. Let's take a look at this. I'll have some thoughts, and then we'll go further from there.
NHS has a huge problem with backlog. Those problems are not solvable without technology.
Okay. Your company's in the running to win this huge contract, according to Foxglove, which campaigns to make technology fairer for everybody, and according to Doctors Association UK, as a result of what they call pandemic opportunism and a concerted lobbying effort. What would you say to that?
We go to clients all the time and we say, look, we believe our product is the best. We will give it to you for free and you can test it. By the way, that's the other thing I would say. We're giving you the single most successful enterprise product in America, the most difficult place to win in.
Okay.
So,
well, just so we make it clear for our audience, your company charged the NHS just £1 in 2020 to develop its COVID data store, which holds personal information on patients around diagnosis, treatment, etc. You then gave the government for free an IT system.
By the way, what's the problem with that?
Well, let me get to the end of the question, if I may. You then gave the government for free an IT system to help with its Homes for Ukraine scheme. The government's procurement watchdog wrote to you about his concerns about how you gained a commercial foothold. He's concerned.
Just let me explain something that's more towards America. We have a problem in America in government that a lot of the software doesn't work. And so they're basically attacking us for saying, I know our software works. Most of the software that these entities use, as everybody in the NHS knows, is not working. So I want to prove to whether it's the United Kingdom's government or it's my massive business in American commercial. If I show up to you as a smart person and say, my software is so good, I'm going to charge you $10 million. You're like, well, if it's so good, why can't I try it? So it's because that's what every smart person is going to say. I've been all over the world over 20 years. I spend most
But isn't it also true, Mr. Cox, sorry to interrupt, isn't it also true, it then puts you in pole position for a really lucrative contract like this one with the NHS?
Everybody in the world who's in this business should do the same thing. One of the things.
But do you accept it puts you in pole position?
I use this way of going to market because I believe most software products don't work. It only puts us in an advantageous position because everybody who doesn't like it, by and large, does not believe their product works, or they would do the same thing.
All right. So that right there is what I wanted to talk about and what I thought was so incredibly important. What Karp is saying, and we're going to watch one more clip from Karp from the earnings call that basically matches what he said in the BBC interview. In regards to the NHS, the contract was delayed till mid-November. We talked about that yesterday. What he's saying right there is something I wish the British media took really seriously and every Palantir shareholder understood. If you go up to someone and say, hey, I have a product that's so good, you're going to pay $10 million for it. Someone who has $10 million would be like, okay, I'm just not going to give you $10 million. Can I use it for a little bit and see if it works? If you're a software company, you should not be saying, well, let's go to a steak dinner. I'll show you a couple PowerPoints and then, then you could give me the 10 million. You should be like, no, take it for free. I'll charge you £1, which is what they did with the NHS back in 2020. Palantir was very obvious. I mean, their go-to-market to me is the go-to-market you want from companies. And that's why this is why I like investing in the company. Someone who's as brave and courageous around their product, who's able to tell to the media, hey, I can spend years of you using this product for free because I know it will be so good. Even if you get years of value from it, you will come back because you will never go to anything else. That is the way software should be procured. It should be a meritocratic process where, yes, of course, it puts us in a pole position, in a really good position to get very big deals. But the reason we're in that position is because the software is so good, we were able to give you the software for free. The competitors that feel like you have an unfair position, they have crappy software. And if their software is not as good as ours, which is obviously the case, they're not going to give it to you for free. And then as a customer, who are you going to go with? The one who gives it to you for free or the one that's charging you $10 million up front? You're going to go with the one for free. And when you have concerns about why it's for free, you're going to talk to the CEO and the CEO is going to say, because I know you're going to pay me that $10 million eventually. That is the way software should be procured. And as a Palantir shareholder, I think it's very important to understand that because that's the company we're investing in. And if we're investing in a company from that perspective, then we have to be okay with that go to market and how aggressive they are in that approach of basically saying, we're going to win. It's just up to you for whether you want to accept it now or later. And what makes this full circle is what's going on with AIP. They're not making money off AIP yet, but they're getting a ton of customers because they know AIP is going to work and eventually they will increase their revenue, whether it's 2.9 million to 3.4 million to 5 million, whatever it is average per client. Right now it's about 2.3, 2.4 million. Eventually that number will be bigger because of AIP monetization. The question simply becomes when that will happen, but they're not afraid to give you that right now and then see what happens in the future. This is what Karp said on the earnings call that is very similar to what he said in the BBC interview.
my view of what we should do is build products that are so good that the competition stops competing, whether that's in commercial or on the battlefield. And that's what we're doing. And that's what we're seeing in AIP. And I haven't seen something like this since PG, which was our first anti-terror product. No one bothers even, like currently PG is blocked in Germany. That's because somebody doesn't, whatever. It's like they're waiting for a terror attack so the AfD can win. It's like insane. So any case, no one's bothered saying we should build another PG. You can't build it. So you can just opt to not have the product. There'll be people who do that. And that's the aspiration for every single one of our products. And that's what I see in AIP.
And so that was one thing I wanted to highlight to end this out. Carp says, my view of what we should do is build products that are so good the competition stops competing. And at the end of the day, that's the company I want to invest in. That's where I want to have my money at. I want to invest in a founder that really believes his company is so good that they're going to make products that makes the competition so scared of competing that they can give away their stuff for free and eventually still win business. And that's why I think Bank of America is upgrading Palantir. We're seeing a lot more upgrades. We'll talk about more upgrades in the future and some potential downgrades that we're seeing. But that's why there's a lot more excitement post-earnings around Palantir stock. That's it for me. Thank you guys so much for listening and watching. Please like and subscribe. Follow on Twitter. I'll see you tomorrow on another episode of Daily Palantir. Let me know any topics you would like to see discussed in the comments. I'll see you guys in the next one.